Good evening, everyone. My name is Paul Young. I'm going to walk you through corporate welfare. The reason why I want to do that is it comes up as a ton of buzzwords when you talk people that support the NDP party, and basically it's a way to kind of point fingers at corporations being these nasty corporations that don't like to pay taxes. It's the NDP's way of trying to go after this 1% people or the rich corporations that pay more into that fund to support social programs. So in a nutshell, overall in Canada, corporations are small, medium, and large in size, and they operate based on domestic as well as international market. So depending on the area of focus depends on how they operate in this country. Now that being said, corporations, if they hire employees, pay EI, CPP, and the personal income taxes go into that fund, into the government. They also pay corporation direct taxes based on their net income, and they also pay things like excise, commodity taxes, property taxes, depending how they're set up. So they pay a lot of money into different types of taxation. The only thing you ever hear about the NDP is about the corporate tax rate at 16%. And they never talk about all the indirect taxes that these corporations pay into governments at various levels. The other thing that the NDP never talks about is that 1/3 of the direct corporation tax goes into that bucket that supports Canadian social transfers as well as health transfers as well as equalization, and you don't hear that as well. So one of the goals of Stephen Harper did in office was make sure that our tax rates are competitive around the world to kind of make us attractive for foreign direct investment, to bring that investment into Canada. Now it's not taxation rates in its own right that help support investment, it's other underlying rules and regulations for red tape, environmental processes that also drive investment. So the issue that you see with Mulcair is he's only focused on one aspect, and that's taxation. He's never really gone into other aspects that support foreign direct investment. Now let's talk about corporate welfare. In a nutshell, it's giving handouts, and that's how the NDP operates. They want to show you that corporations aren't paying enough taxes to support the social programs. So let's talk about how corporations operate, and this is all legitimate between the various income tax acts between various countries. Companies basically have what we call an overall corporation or head office that controls its subsidiary companies. Now, in a lot of cases, in order to better operate, they may have better debt obligations, so they may have better debt covenants or regulations that they can go into to better support capital flow. So they may negotiate debt level at a high level and then foster that debt out to loans to their subsidiary companies. That's where intercompany interest comes in. The other way that they can take money out of a subsidiary company is through an intercompany dividend. So in other words, they take some of that profit out, move it up to the corporations, either put it in direct capital or also to shareholders' wealth. Now let's stop there on shareholders' wealth. It's not just about the bumping of the shareholder value price for these stock options for CEOs. It's also a lot of these companies have pension funds attached to them. Pension funds buy companies that have a good rate of return. So when you look at your CPP or your personal RRSPs or any sort of investments that are going into the market, they're directly attributed to how profitable companies are. That's an area that Thomas Mulcair never talks about. Why? Because again, he doesn't want people to know the complete picture. The other areas that companies do is they create what we call shared services. These are areas where engineering, finance, purchasing are consolidated into one central location to better support the entities overall. So it's a way to manage administration costs. Another way that they like to move things around is through R&D. So it's another way to kind of what I call is repatriate cash at a lower rate by using R&D. Now, in a nutshell, any outflow of cash impacts balance of payments. So if Mulcair decides to hike rates to corporation, they may decide to move more money out of Canada in terms of dividends or other ways to kind of minimize the impact of those taxation rates. That's not something Thomas Mulcair talks about. Why? Because he has no clue what it takes in order to compete. All corporations will respond to changes in cost. So that's why I wanted to bring that into play. Let's talk about Thomas Mulcair. Okay. Well, Thomas Mulcair in general has taken two approaches to business. One is he's basically looking to raise the corporate tax from 16 to 17.5%. Then what he's doing is he's basically also planning to hike CPP for all businesses. He's looking at a cap and trade policy, which he's not clear with, but it could be that he'll put the regulations at a high level and push it down to the provinces to put the onus on them to implement it, their own carbon pricing. He also is looking at more regulation and red tape. Now, all four of these areas will hammer business. We have a slowing economy, an economy that's not going like gangbusters. The last thing it needs is shock. Anytime you put a lot of shock into an economy, usually you see a deterioration in conditions. The companies start pulling back things and revisiting where they want to invest. Now, it's funny how he wants to hike taxes, but then he turns around and says he wants to create these so-called innovation funds. Most cases they already exist, which he condemned Harper in most cases. Now, let's talk about those innovation funds. They're a handout. So if he doesn't like the fact that corporate taxes are a handout, now he wants to give business a handout. So to me, he's a hypocrite. If he's all for against social welfare, then he shouldn't be planning to give handouts. The other thing is he's planning to provide subsidies to a business like Canada Post. So he's taken maybe $250 million of taxpayers' money and putting it into subsidies. So that $250 could have went to healthcare. So you guys need to ask questions to where really does Mulcair stand on social welfare. Now let's talk about cash hoarding, because that comes up as well. It's just the way of holding investments. What Mulcair doesn't tell you, same with Peter Julian, Nathan Cullen, all the NDP, they don't tell you that a bulk of that money is in the top 50 companies in the world, or 63% of it is in the top 50 companies. Most of them are high tech. So why doesn't Mulcair tell you that? Because he doesn't want people to know the truth. He doesn't want people to know the real facts. The other misnomer is that companies are not reinvesting money. I went and looked at Stats Canada and looked at capital investments into Canada. Then I looked at the corporate profits, but making a calculation. I found out that Mulcair's lying. He's not being truthful. Companies are reinvesting money into this country. So despite what he says about the rates, the tax rates not being invested, it's a fallacy. It's not happening in terms of what he says. What it basically is happening, Harper's policies are working. Our exports are now $530 billion. Harper's also has key investments to help innovation. So why would you want to change a government to a policies of high tax, high regulation, to a government that's decided that we need to have a focus on the economy? And that's Stephen Harper.